Thank you very much for joining us. Sorry about that, starting too early. Thank you very much for joining us, and we'll be touching a very interesting subject, identity and identification. And first we'll try to view it from a broad perspective, and then we'll try to narrow down a little bit and just focus it into financial services as what we are trying to solve here. It is truly, everyone says this, but now it's truly my pleasure and honor to have my two dear colleagues here. They have been pushing the boundaries in terms of identity and identification from their respective fields, so from the public good perspective and from the academic and private perspective. So they have really contributed to push things forward in terms of technologies, in terms of ways of going forward. So it is really a pleasure. Let me first introduce Siddharth Shetty. He's the advisor to the Indian Finance Ministry in digital infrastructures. He has worked in public goods all his life, and he's a very knowledgeable architect. He has contributed very deeply to one of the most interesting and important public infrastructure, digital infrastructure in the world, which is the Indian stack, and he has been a very key contributor to that. In particular, he was the lead architect in the data empowerment and protection architecture, which is kind of a techno-legal framework that gives individuals and small entities the power over their own information. But not just that, he has worked in many other pieces of technology that have pushed digital records for medical elements, and he has contributed to bring drones into the civilian aerial space of India. So thank you very much for being with us, Sid. We also have Dawn Song. She's a professor in the Department of Electrical Engineering and Computer Science at Berkeley. She's a co-director of the Berkeley Center for Responsible Decentralized Intelligence. She's an expert in AI, cybersecurity, blockchain, many other things. I wouldn't finish with all her expertise. And she's a recipient of multiple awards, including the MacArthur Grant, the Guggenheim. It's many very prestigious awards. And not just that, she's the most cited scholar in computer security. And not just that, but she's a serial entrepreneur, and she was mentioned as one of the 100 women entrepreneurs by Wired. So we have two true luminaries here, and I'll try to speak as little as possible from now on so that we can pick their brains. Let me start with one very basic and general question. We're living in a world in which information is overflowing, if you wish. So we have many pieces of information running around, and on one hand, this can help the entities provide better services for the users, and this can also provide the systems with information to clean up systems from the perspective of KYC and knowing who you're dealing with. But then on the other side, or on the other hand, you also have that this same information can be exploited against the consumer. And you can have here examples with big techs, examples with financial institutions, and even some governments that might mess up with this valuable and hugely available information. Can you tell us a little bit your perspective? How can this affect welfare, and how can the technology help us make this trade-off a little bit more acceptable?
Okay, great. Yes, I'm happy to help. So yes, as we all know, really, so data is the lifeblood of the digital economy and also for AI machine learning. So today, yesterday, we talked quite a bit on AI machine learning as well. And also the global, essentially, data economy has been growing exponentially. And now it's being estimated, the value created from personalized data is now a significant fraction of global GDP and so on. And so with this economy, of course, a lot of data is sensitive, and handling the sensitive data has posed significant challenges for both individuals and businesses and governments as well. Right? So for individuals, I think many of us have experienced also, like individuals essentially have lost control of your data. Like oftentimes the data has been sold are misused without users' awareness and consent. And also for businesses and for governments, there are lots of challenges too, with large-scale data breaches, and also, even more importantly, the valuable data, a lot of valuable data has been sit in data silos, and difficult to actually, for government institutions to really utilize the data to realize its benefits. And as we move forward towards the digital era, essentially all these challenges, if we don't address them, will become more and more severe. And hence, there's an urgent need to really build a new paradigm, new framework. So this is what I call actually building a framework for responsible data economy, meaning that essentially we need to be able to have better effective ways of utilizing data such that we can maximize the data utilization for societal benefits, for social welfare, and so on. But also at the same time, we need to be able to do this in a responsible way, meaning that we need to help users and data owners to better maintain control of their data, establish data rights, and also for data owners and for users to be able to gain sufficient benefits from their data. So that's what I call responsible data economy. And I can share a real-world use case example for how this actually can manifest in the real world and how it can really bring out the benefits for society and also at the same time to protect privacy. So recently, so as Miguel mentioned, so I both do research in the space and also I'm a serial entrepreneur. Founder of a company called Oasis Labs, and recently we launched a partnership with Meta for what's called a privacy-preserving AI model fairness assessment. So here, again, we talk a lot about how to use AI machine learning for financial services. In Meta's case, AI models are important for doing recommendation for users and so on. And hence, so for all these settings, it's actually really important to ensure that the AI model is fair. There's no bias for gender, race, age, and so on. And as a first step, it's important to be able to evaluate, to measure the fairness of these AI models. And then in order to do that, you essentially need to know sensitive information. For example, users' race, age, gender, to be able to do this measurement. So in this case, together with Meta, we actually developed the first of its kind large-scale real-world deployment of privacy computing technologies. So using various advanced cryptographic technologies, including secure multi-party computation, zero-knowledge proofs, and differential privacy, put together, we developed this privacy-preserving technologies to be able to calculate the AI model fairness without leaking user-sensitive information. And the technology has been rolled out to all Instagram users. So it's really the first of its kind, a really truly large-scale real-world deployment of this kind of technology. So in this case, it's an example showing that users in this case are able to protect their data privacy, but also at the same time, the data is being able to be utilized to in this case, to compute AI model fairness, which is a really important measure for society in this case.
It's very good that you're putting some privacy-preserving mechanism within Meta. Let me go.
That's why it's very important for them to ensure that this technology is secure and
it's good. It's good. It's good everywhere, and in particular also there. But let me go to you, Siddharth, and we see a deluge of different technologies and different protocols trying to deal with identification and identity. And one of the characteristics, the technical characteristics of that is whether we decide to go for a decentralized world or a centralized world. But I think India's solution was quite interesting because it is not a corner solution. And it has certain elements on the centralized world and certain elements on the decentralized world. So can you take us a little bit into the Indian model and share with us which parts of the technology work better for what services?
Sure. Thank you, Miguel, for giving me a chance to speak today and to the BIS as well. It's really an honor to be on the panel along with Don. Before I answer your question, maybe I'll set some context on what the environment was like in India during the early days when we had to think about digital identity. If I go back to, say, early 2008, at that point in time, we were about 1 billion people. We are 1.4 billion today. We had only about 17% of our population had a bank account. About 1 in 10 Indians had any form of unique ID. And being an emerging economy, you typically, and you see this in other emerging economies as well, you don't have proper civil registries as well. So there were no clear birth registries that you could leverage. Even at that point in time, India ranked about 150th in the global list in terms of even per capita internet data consumption. And so the question for us was really, if we needed to drive inclusion and drive inclusion at scale, and our view was inclusion will happen only if people can be brought into the formal banking system. The first step was, how do you get people to open bank accounts, right? And under the AML construct where KYC is very key, how do we do that? The BIS's study extrapolated that if we had followed the traditional process of bank account opening, which is the paper-based process, it would have taken us about 5 decades. and to get to where we did in 10 years, so in about a decade. So what drove that leapfrog was essentially the Aadhaar project. Now, Aadhaar is a unique ID. It's a 12-digit unique identifier that's given to every Indian. Over 1.34 billion Indians are enrolled into the system today. It's digitally authenticatable. That means against my biometrics or any token like an OTP sent to my mobile/email, I can authenticate and prove that indeed I am the owner of that identifier and I'm linked to that. And that's the base public infrastructure. You can think of it much like public governments created public highways. Aadhaar was the base public infrastructure that was then opened up to private sector. And this was also a very key part of the design. So you, of course, had to create a centralized registry for deduplication. And deduplication and uniqueness was important, particularly as part of welfare delivery. Otherwise, you have a lot of leakages, ghost beneficiaries, etc. If we didn't have that use case, we wouldn't have even created a centralized registry. But that was a key use case. And then people could enroll. It's self-sovereign, so you declared minimal attributes, just your name, year of birth, gender, photographs, and your biometrics, that's it. And people can, of course, update that. So it's completely individual driven. And then in return, the Unique ID Authority of India would give you a digitally signed attestation. And now you can take that attestation and give it to any private sector entity. This is what individuals did by giving it to banks. And that drove the large-scale opening of bank accounts. They did it when you participated with the telecom companies. That took India from 150th to now the first in the world in terms of per capita data consumption, because people use that KYC to get SIM cards, and a whole range of use cases came up on top. And so really when we look at centralization and decentralization, I think we get lost in what parts are centralized, what parts are decentralized. Fundamentally, in Aadhaar, the design is very federated. The operations of it, how you access the system, it's not one incumbent authority and one centralized ID. In fact, with the recent changes, people can even authenticate themselves in an offline manner. So the system never knows where you've even used your Aadhaar ID. And so privacy was a very key part of that design. And so that's sort of the first step of India's journey around digital ID, and how we looked at the nuances between centralization and also leveraging the benefits that decentralization bring in, particularly when you have to deal with diverse contexts and environments.
Of course, always the middle point is always better than the extremes, right?
Yeah.
Thank you. So Don, let me go back to you, because the decentralization phenomenon has bring a different perspective on people, right? Like they now know that they're entitled to certain things, including the management and the ownership of their identity and their identifications. And your research has been quite influential in terms of pushing boundaries there. Can you explain us the basics of this concept of decentralized identity solutions, self-sovereign identities, and things like that? And and how is this relevant to give the identity or the power of identity back to the individuals?
Mm-hmm. Okay, yes, a great question. So I can also walk through the history a little bit. So essentially, with identity, we've gone through Web 1.0, Web 2.0, and then now coming to Web 3.0. So in Web 1.0, everyone is familiar. You, for example, log into websites with your username, passwords, and so on. So that's your Web 1.0 identity. You remember your username, password. And then with the Web 2.0, now there is more of these services, like identity service providers. For example, you can log in with Facebook and with other identity service providers. So in all these cases, as you can see, in order for the user to use a web service and to prove user's identity, essentially the user has no actual control of its identity. The user is relying on these centralized platforms to provide these services, either in the Web 1.0 case as central servers who actually knows the hashes of users' passwords and so on. So can use that to authenticate users or these identity service providers. And so in this case, user will rely on Facebook to do the authentication and so on. So in Web 3.0, really, it's a paradigm shift. So this really is with technology advancement. So with the Web 3.0, we call it essentially decentralized identity. Is that users now can have their own public-private key pair. So users now the user will know its private key, which will essentially be able to control its identity. So now a user to prove to a web service or to some other services, users can use the service, then the user just need to sign message to prove that the user knows its own private key. Then in this case, because as long as the user knows its private key, it doesn't need to rely any central party to manage the user's identity. No other parties actually know user's private key. So in this case, the user is in full control of his or her identity. And with this, then actually this really serves as a root of trust. So now users don't need to rely on trust of any other central parties or third parties and so on. The user has its own controls its own keys, and then this also builds a foundation. So we have a recent paper that's coming out on systematization of knowledge on data sovereignty. So this decentralized identity serves as a base foundation, and on top of this, users can then maintain control of other resources. So one way of looking at these crypto tokens, that's one example. Like you have your keys, and then using your keys, you control your assets, your tokens. And similarly, then with data, so in this data sovereignty paradigm, the underlying layer is decentralized identity. And on top of that, with the decentralized identity, you can have what we call decentralized access control to data. Unlike today, users' data often is stored in centralized platforms, and the centralized platforms essentially has users' data. But in this Web3 paradigm, there can be decentralized access control, which helps users to better maintain control of their data and determine who can access their data. And then on top of this layer, and then even further on top is what we call policy-compliant decentralized computation. Essentially, users can give consent to other computation, and then the computation can take place in the form of confidential computing. When the computation is compliant with the user's desired policies, then the data can be utilized for this computation, but in a fully privacy-preserving way. So this altogether is what we call data sovereignty, and really helps both help users to maintain control of their identity and their data, and also at the same time to enable better service users can benefit better from the services as well.
That is awesome. I'm so sad that we only have 30 minutes, because just this answer, we could take like 3 hours in just going deeper with the different technologies. Siddharth, let me just try to take this a little bit more into the financial realm and trying to identify how can this affect the financial services that are being provided? So there are several costs in terms of getting the KYC done by the institutions, and most of that generates two big problems for the financial sector: financial exclusion and the problem with cross-border payments in terms of not knowing who you're dealing with. From your perspective, do you think that these new technologies, these new ways of generating identity and managing identification by the users can help us reduce these costs and therefore helping a little bit financial inclusion and cross-border?
Absolutely. I think, as Don outlined, if we look at it, what these new technologies are really doing is giving more power back to the individual and power back to by individual, it could be an individual or an SME. And they now have the ability, the choice, the agency to participate. When we looked at it in India, again, with 1.4 billion people, you cannot, and with that amount of diversity, we could not expect one government service provider or one private company to actually solve for those needs, right? So how do you allow individuals to have choice, to have agency, autonomy in making those decisions? You do want market forces to go in. But market forces are not going to go in if the transaction costs are very high, right? They'll stay away. That's why you have exclusion. And so the categorical focus has been, can we lower transaction cost? If you can dramatically lower transaction costs by 100x and more, you start to open new markets that were not possible before. And so we spoke about identity in the first half, and that lowering of transaction cost and KYC drove the large-scale opening of bank accounts. But then on top of that, now that people had bank accounts, the traditional ways of moving money, which are primarily card networks, are extremely expensive. And if we thought of the deployment of any formal financial service, credit, insurance, etc., it's absolutely absurd that 1% to 2% that you pay to an informal money lender would then be going to a card network. So the interest rates for any of these small SMEs, imagine a small vegetable vendor, just don't work out. Right? So how do we scale that up? How do you give them a leg up into the formal financial system to purchase a sachetized product? And that drove the thinking around UPI, which is the Unified Payments Interface. This was built on top of the banking system, so you could think of it as a three-layer cake. It's public infrastructure at the base. It's an interoperable rail built by the National Payments Corporation of India. On top of that, you have the bank accounts. This was a very conscious decision. We didn't go down the path of wallets. We didn't go down the crypto path. It's sort of a third way. And really, it was the original way as well. And so if you look at it, you now have banks in the middle. These are the regulated entities. And then we opened on top of that to private innovators, big techs, a whole range of companies. But those private innovators are not part of the money flow, right? So they're just permission collectors. They create the front-end experiences. They go out, they acquire consumers, etc. Money flows within the regulated system. From the central bank's perspective, there's a chain of liability, so on and so forth. And so that marriage between public infrastructure, private innovation, the public infra lowering the transaction costs, much like public infra in the physical world lowered the transaction costs for then automobiles and a whole bunch of private commerce on top. We've just applied that in the digital sphere in identity and payments.
That's awesome. Digital public infrastructure is of the essence to improve welfare, no?
Yeah.
Let me ask you both a question. We have a few minutes to go, but so with the large focus on the importance and the value of our data and the linkage with our identities, it is very clear that things can go very well, but also if our data is copied and used for some other purposes, and we start getting into trouble, no? And Don already mentioned some of the technologies that can help us reduce this possibility, the CKPs and then all the other technologies. But do you think that there is a technological solution, a purely technological solution to this problem of misuse of data, or is this something that has to go on a broader dimension and take some other legal perspective? What do you think?
Mm-hmm. Okay, so yeah, I'm happy to share. So I talked earlier about this framework of a responsible data economy. Given that data and data privacy is actually an extremely complex topic, there's actually no, perfect data privacy. If you want to use the data, you can. There's no perfect data privacy, and hence, in this case, so actually in the framework that I mentioned, is responsible data economy. So I actually propose, so there need to be at least three main components. One is the technical solutions, which includes what I call responsible data technologies. So these include secure computing, for example, the secure hardware and secure multi-party computation, fully homomorphic encryption, so these kind of cryptographic techniques, and also differential privacy, which helps protect the computation output from leaking sensitive information, and there's federated learning, how you actually have data remain on the device, but train the machine learning models in a distributed way. And also using, for example, blockchain for managing data rights and so on. So these are different responsible data technologies. But besides that, you still need better legal frameworks. So GDPR and CCPA is a good first step. But I think we need further advancement in terms of how to better help establish the data rights and help users to maintain data rights and so on. And then also better incentive models as well. So we do some work in developing new frameworks for data valuation, what's the best way to attribute data to data contributors and so on. And I think these different components are very important for establishing a responsible data economy.
Thank you.
I think fundamentally we need a techno-legal approach. It has to be a combination of both. Given the class of the problem is, it's not purely legal in nature, it's not purely technological. So one of the attempts that's been underway in India is the account aggregator initiative. This has been driven by the central bank, the Reserve Bank of India, along with the other financial sector regulators, so Securities and Exchange Board, Insurance and Pension Funds regulator, where they said, how do we give people control of their data? And now if you have to give people control, that has to manifest technologically and also legally. But what are the institutional setups through which that control is given, right? Because you can say you have control, you have rights, but where do I go to exercise my rights? How do I exercise it? Where do I give consent? Do I go to each custodian of my data, every bank, every mutual fund, every insurer, every hospital? That's too much of running around, but that's what people have to do today, either physically or digitally. You're running around to different portals or physically to different branches, resulting in even more exclusion, lack of competition, no choice. Or do you go to the consumer of your data, right? This is the meta problem. They're essentially interested in serving you ads, so they're never going to create an informed consent experience. So many legislations across the world, including India's draft data protection bill, talk about the idea of informed consent. And so what the financial regulators did is they took that idea and created a new institutional setup called account aggregators. And today there are about, I think, 9 account aggregators that are licensed by the central bank, another 7 that have an in-principle approval. And the way it works is very simple. Data remains decentralized with your custodian, with your bank, mutual fund, insurer. It's cross-sectoral. You go to an account aggregator of your choice, which means if you don't like one, you can go to the next. The framework is inherently interoperable. So whichever you go to, you'll get the same set of accounts at any point in time. Identity is federated. And this is important. So although I spoke about Aadhaar and unique identity in the early part of the conversation, we actually don't use Aadhaar anywhere in the data sharing architecture, because our principle was the individual should form or be able to create a unified view of their data, but no one in the system should have a unique view. And so you go to an account aggregator, discover where your data resides using a federated set of identities, link your accounts, and you'll get an ID. Imagine Miguel at the rate of account aggregator 1. And now tomorrow when you go to a lender, you'll just give them your account aggregator ID. And that lender will raise a consent request because they'll say, hey, Miguel, in order to give you a loan, I need access to your data. So out pops a consent request on your phone saying, okay, this lender is asking for your data for this time period, for this purpose, so on and so forth. This is how long it would be stored for. Again, many of the constructs present in privacy legislations across the world, like GDPR, like the Data Governance Act and the California Data Privacy Act. But now you encode this in technology through open standards. And if you approve it, in real time, your data is shared in an machine-readable data in an encrypted form, digitally signed and then encrypted downstream with the lender. So this system is live. Over 1 billion bank accounts are already part of the system, and capital markets and insurance data is also part of it, and consumers are using it. And so what we are seeing is when you give people control, then through a techno-legal mechanism, you can also open up the innovation side of the ecosystem with sufficient guardrails as well. So that's just my perspective on, of course, you need appropriate accountability, and I think some of what Don spoke about, which is newer types of privacy-preserving computation means my data doesn't really have to flow as well. But we should also not remove the agency from the individual. I often hear certain lawyers propose a full accountability mechanism saying, consent is broken. But I think if you have the right mechanisms, you create the right tools, you can preserve agency but also have accountability.
Thank you so much for that. And please, everyone, help me thanking our colleagues here. And please approach them if you have any questions on identity. It's a rare opportunity to have these people here. Thank you.
Thank you.
Thank you.